Clay Patton on the Rural Radio Network. We're talking now with livestock market analyst Kyle Bumsted. And Kyle, USDA releasing earlier the cattle inventory report, a biannual report that gives us a look as to where cattle inventory sit right now in the U.S. Give us a rundown breakdown first, what USDA had to say, what the numbers look like.
Well, so far, Clay, it looks to be a fairly neutral report. It was kind of within line of the expectations. Now, there's only the four analysts that give numbers here as far as the estimates, so that's all we have to go off here as far as a guess. But all cattle and calves, as expected, it was the lowest in 8 years. The total cattle inventory was 97% as of January 1, compared to the average guess of 97.1. The major estimate traders wanted to see is the percentage of beef cows that have calved at 28.918 million head. That total was 96.4% of last year compared to the average guess of 96.8. So the number difference is about 1.065 million head, which suggests about a million fewer head of cattle will be produced this year. Total on feed January 1 was 537,000 head, below last year's 14.1573 million. The difference, the only difference in this report is it does include feed yards of less than 1,000 head capacity. So the big drop here, basically, as we all know, the trade has known as well too, has been the 3.6% drop in beef cow numbers from last year, and that was close to the trade's expectation. It's under the low point of that number we had back in 2014. It's the lowest we've seen since 1962. So the heifer retention was only 94.2% of last year. That was under the 96.7% trade guess. The cow herd is still going to drop hard moving forward, but I still think there's going to be some headwinds here for the cattle producer moving forward.
And Kyle, let's look back at some historical data referencing other big drought years. Did we see a similar drop in cow numbers, or is this a more significant drop than what we've seen before?
This is kind of a more significant drop here. The actual beef cow inventory, you've got to go clear back here. 2014 was like 29 million head, and now we're sitting at about 28.9. So we did start rebuilding that herd in 15 to 29.3, and then 2016 and 17 we saw some big jumps to 30.2 and 31.2, and we peaked out around 2019 there at 31.7 million head. So we have seen some big drawdowns here, but it does bounce back quickly. But again, there's going to be some other factors affecting us retaining heifers, Clay.
So, Kyle, as we saw last week, the feeders were actually able to make the packers come to them. Is there this thought, are packers short bought? Are they going to continue now kind of being on the short bought basis if we continue to shrink overall on this cow herd from a fat cattle marketing perspective?
Well, Clay, that's a very good question. And in order to look at that, we kind of need to hit on carcass weights. Carcass weights are a little bit below a year ago at this time, and it's kind of hard for me to expect them to stay below last year's and move forward into the second half of 2023 here. I know we've got a long ways to go. We're just starting the year out here. But the premium that we're seeing here in the fall contracts, the October futures, if you look at them, are about $8 over last week's Nebraska cash price. These futures are about $12 over. And if we look out a year from now, February 2024, there's about a $15 premium over the Nebraska cash. So the thing that I see that's going to be a headwind, to keep that is I think that the cattle feeders are going to feed into that premium if we keep that premium out there. So the carcass weights, we are still producing a lot of pounds, even though we are down on cow numbers. So right now I do think that there is some sort of a scramble here in the Southern Plains here for the packer to be locking up some cash, which I don't think they've got the cattle down there. That's just a personal thought. But when we see box beef and things like that starting to see setbacks like we did here last night, we really need to keep that on our radar too, because that could maybe force the packer back into the upper hand where they won't have to bid up as much because they're going to start harping about packer margins again.
And when we're thinking about this for the rancher, I know a lot of guys thinking, okay, if we've got the feed, let's stretch it. Let's try to retain heifers. We know the cow herd's going down, but feed is getting tight already this winter. More heifers coming to town. Is it a year, 2 years out? When do we actually probably see more heifers actually being retained here in the beef herd?
Clay, you hit on a big point there is the feed situation, but number two is the interest rate situation. Can the rancher afford to keep those heifers back? That's going to be another thing here. We do need to keep our eyes on that, but it could take upwards, at least 18 months to 2 years before we start to see some retention here if we can get these things to cash flow right.
Again, we're talking with Kyle Bumsted, the livestock market analyst. And Kyle, we appreciate all of your marketing insight when it comes to this, taking and running us a breakdown what's happening right now in the cattle trade. Before we let you go, though, final closing thoughts, important information we've overlooked in our conversation.
Well, I think we need to kind of, just keep looking out here further out here in the future. I do think things are going to get better. I do think that prices will go up, but what I see here short term is, based off this report here, a lot of the trade was anticipating a big drop here. So has it already been factored in? I think there's some of that. So I don't look for this report here in general to have much of an effect on the market. Keep an eye on those deferred spreads. That's kind of what the commercials are looking at here. If they're buying, if they're selling, if they're buying, it's friendly. They're trying to get coverage long term. If they're selling, they know there's plenty of cattle up here short term here that they're going to be able to pick through.
And that again is livestock market analyst Kyle Bumsted. You can always give him a call, 308-708-7340. Do remember, trading futures and options involve risk of loss, may not be suitable for all investors. Do consider these risks before investing. Again, it's livestock market analyst Kyle Bumsted here on the Rural Radio Network.